Hope everybody is doing well and has had a good day so far. Really, really interesting day. And obviously, the day picked up towards the end. So let's see here. First things first, as always, there's a few things I do. Number one, I always add the high of the prior day and low of the prior day. While I'm doing that, you can draw all sorts of lines, you can find all sorts of reasons for trades. One of the single most important thing on any day is the current bars. So let me do this really quick, and I'll explain why I'm saying that here in just a second. So, anyways, the single most important thing on the open is the opening bars. I'm always paying attention to the prior day's high and the prior day's low. So here's the high of the prior day in blue, and we have the low of yesterday right here. First thing to look at is the daily chart. And we can see on the daily chart a few important things. The single most important thing is what I said on the review. You can see right here, we have a tight trading range 4 bars. Today was the fifth. Whenever you get a tight trading range, that means the market is neutral. And therefore, the probability of a breakout up or down is lower than what it would normally appear. So tight trading range, probably going to test closer to the moving average fairly soon. First bar of the day, bar one, we have a bull bar closing under the moving average. For the bulls, it's an okay swing buy, but look where you're buying. You're buying in an overall trading range day after a gap down, and bar one is closing below the moving average with a tail. That increases the probability that there might be some more sellers above the bar rather than buyers. Bar two, we have an inside bar, probably sellers above, buyers below. And then three, we have an outside up bar. For the bulls, you can buy the close of three. However, if four closes on its low, I suspect a lot of those traders will exit below the bar, especially if it's a relatively big bar. So the bears, they want a second entry. Whenever you get an outside bars are trading range bars. By the way, feel free to go ahead and ask questions, and I will review them at the end. And then four, we have a doji, not a good sell signal bar, probably buyers below, scaling in lower. Five, a bull bar, but possible parabolic wedge, 1, 3, and 5. But again, we have not had one bear bar closing below the open of the bar out of the past 5 bars, and that reduces the probability that the market is going to go. That reduces the probability that the market's going to go straight down. 6 broke below 5, found buyers. So it looks like we're trying to form a small pullback trend. But when you look at this rally, it looks like a leg in a trading range. Possible wedge, 1, 2, and 3. Many ways to draw the wedge. But looking at this, do you really want to sell below the bar? Probably not. Low probability sell. Probably buyers below, scaling in lower. And then we can see on the very next bar, we almost went outside down. We tested near the 7 high on 8, and then we reversed down. But 8 failed to close far below 7. And that lowers the probability that the market's going to go a lot lower. We still may get at least a small second leg down. But the reality is there's probably buyers below the 8 low scaling in lower. Although the pullback could be fairly deep. 9, we formed an equal low with 8, couldn't break below it, and went outside up. It's not exactly an outside bar, but the reality is we tried to break below 8 and we failed. So the odds are the market's probably going to go at least, the odds are we're going to be more sideways. What about buying above 9? I would not. There's probably sellers above 9. 10, we formed an inside bar. What about selling below 10? Well, selling below 10 is kind of like buying above 9. Whenever you get outside bars and inside bars, that increases the probability that the market is in a tight trading range that's expanding and contracting. So most traders are better off being flat and waiting. 11, bear breakout, but still sideways. So we're entering breakout mode. 12, inside bar. 13, inside bar. Not good trading. We're right around the moving average. Most traders better off waiting for breakout mode. 14, bear bar closing below. 13, but still not high probability for anything. Most traders are better off swing trading. And if that's the case, they're better off selling. If they're going to trade really small and add to the position. Similar to over here. They're looking to buy. If you're buying in here, put a stop down here, trade really small and add as the trade goes your way. Outside down 15, but 3 pushes down. 1, 2, 3. So there might be more buyers below. 16, bull bar, possible wedge. But then, really not great. We have a bull bar, another bull bar 17, another bull bar 18, another bull bar 19. Think about the issue with this rally and ask yourself, what's wrong with it? It's 4 bull bars, but is this all that strong? Of course not. We have a lot of overlapping bars. Big bar 18 with a tail, 19 overlapped most of 18. And that increases the probability that we're going to be more sideways. 20, we tried to break out of the range on 7. And you can see what happened. We tried to break out and we pulled back. 21, inside bar, sellers above, buyers below. It's a high 1 buy. So as far as a few reasons, 1, high 1 buy, breakout, pullback buy. If I had to do anything above 21, I'd probably sell it, betting we're going to pull back. 22, a bear bar, high 1s, they typically pull back and get trend resumption. So sellers above, but probably buyers somewhere below. And then you got 23. 23 is a problem for the bulls. They had a weak rally, 18, 19, 20, 2 legs up, 7 to bar 20. And now they have 21, 22, 23, with 23 closing on its low. 23 is a very big problem for limit order bull, for any bull who is long. A lot of bulls, if I was long, I would certainly get out below 23. Too much risk that we're going to sell down to the 15 low and the open of the day. So my initial thought here, always in bulls, exit below that bar, and bears will sell. First target for the bears, open of the day, which really it's the low of 15. But the low of 15, open of the day, they're relatively close together, and the odds are we're probably going to get closer to them. I want to fix the scaling. 24, weak entry bar for the bears, selling below 23, but a bad stop entry buy above 24. 25, bear breakout. 26, a bull bar, but a weak bull bar. Some traders will call it a wedge. Down on 22, up on 23, down on 24, up on 25, down on 25, up on 26. Parabolic wedge, but a wedge is a minor reversal, and that increases the probability that there's more sellers above 26 rather than buyers. 27, sellers above 26, trying to go outside down, breakout, pullback, sell, but we have the open of the day just below, and chances are we're going to get there. I want to say one more thing. So OOD is open of the day. And what I want to mention is this right here. So we have the open of the day, which is a magnet. And one of the things I always pay attention to is the Globex session. So every day I always look at the Globex high. When I say the Globex high, the high of today. So here's yesterday. This is the Globex high. And then I look at the Globex low. And there's a 90% chance you're going to break above or below the pre-market Globex high, Globex low. So what that means, 8:30 Central Time. This is the open, basically, of the day only chart or the US session. Here's the open. Here's the Globex low, Globex high. And here is pretty much where we are. The odds are we're going to break above here or here. So one of my thoughts at this point was we're probably going to test back to the open here, and we'll probably try and get down to 34 and a quarter, which is the Globex low. That would also be a second leg down. Leg 1, deep pullback, leg 2. Bear bar closing on its low, 28, probably going to go lower. And then 29, very big bar. If I'm in it, whenever I'm trading, I often take half off at the open, maybe 2 ticks above, and then target, and then maybe set a second target, excuse me, near the Globex low down here. 28 was such a big bar that that's actually it's actually problematic for trend traders. A lot of traders will look at 29. I said 28, I meant 29. 28 is a good bar. 29 is a terrible bar. It's a very big bar, and that's good for the bears. But the only problem with that bar is a lot of traders will just take profits. We're testing the moving average right here on the 60-minute chart. And if we look at the 60-minute chart, if we look at the 60-minute chart right here, we're in a tight trading range for a lot of bars, and we finally broke below it. But you can see this was the touch. We pulled back, bad high one, sold off for a second leg. But anyways, back to this bar. What would I do here if I was short? I'd get out of shorts. Too much risk. We're going to test back to the open in the low of bar 1. 30, bull bar closing on its high. You can take the buy for a swing, hoping that we'll get a couple of legs sideways swap. But tight bear channel down to 29, probably a minor reversal up. 32 consecutive bull bars, probably going to go at least a little bit higher. 33, 3 consecutive bull bars. What about buying? Traders are buying, but the risk is getting bigger for the bulls, and we're in the middle of the sell-off, so we'll probably go sideways soon. 33, another bull bar closing on its high, breaking above the moving average. Good for the bulls, probably going for at least a second leg, so traders will buy, knowing that the first reversal down probably going to fail. 24, buyers below scaling and lower, and another leg up, outside up 25. 26, an inside bar, probably sellers above. And we'll probably pull back for a bar or two. 27, bear bar, but a bad stop entry buy, not ideal for the bulls. And then 28, which we broke below the bear bar 37 and reversed up. For the bulls, probably going to get a second leg. 39, good for the bulls. But you see what happened. 40 immediately reversed down. 40 did not reverse down immediately. If you look back at this day and you look at something like market replay, you'll notice that this bar actually went down slowly. And then it started getting bigger and bigger. And that's once it started getting bigger, that's when it started selling off quickly. So a lot of traders, they were long 39, hoping that there'd be buyers around the breakout point and we would go higher. But instead, the market sold off. 40, good for the bears. Probably going to go at least a little bit lower, but this is a trend line break and it's an expanding triangle. So there might be more buyers down here than sellers. It was reasonable to buy this close. It's not a great bar, but if you did and you buy more lower down here, chances are the market will allow traders out. And then we got a bull bar, 41, 42, breakout pullback sell, but a bad low one, probably buyers below. And then 43, second leg up, 44, another bull bar. And you can see what happened. 45 tested back to the 39 close. Is it by the close 45? No. We're just developing a further expanding triangle. If you look at the day as a whole, you can see we're clearly having a day with a lot of expanding triangles. So here's the expanding triangle. Here's an expanding triangle. And that's range. The range is expanding. And because of that, there might be more sellers up here. Traders might view this as a wedge. 1, 2, and 3. 46, we broke above 39 and reversed down. Right here. And then 47, a bear bar, bad high one. I think a lot of always in bulls get out below this bar. Bad high one. 48, bear bar closing when it's low. Is it sell to close? Not yet sell to close, but traders, you have more and more bulls bailing out of the trade. And 49, you can see what happened. We gapped down a tick or two below 48, and we immediately went down. 49 is a sign of urgency by the bears. The bears were so bearish, and so many bears wanted to sell the close of 48 that they were desperate to sell a tick below the bar. You can see the high of the bar. High of the bar is 40 and a quarter, and that's the open of the bar. The close of this bar is 40 and a half. So traders weren't even, if you tried to sell the close of 48 at the market, you likely had at least 2 ticks of slippage. I like that question. Someone asked, what trades or mistakes did you make today? I think it's good to ask questions about what mistakes did you make. Those are a good thing. I'll talk about that here in just a few. That's a good question. Very big bar, 50. Strong enough bar that we're probably going to go at least a little bit lower. Can you buy this hoping that this is an expanding triangle? You can, but my only problem with buying that is look how far down we went. We went from here to here. What do you notice? Look at the high of this bar. So look at the open of this bar and the close. Open of this bar, close. We're getting shaved tops. The bears are not even able to sell with market orders. Close of this bar, 38.75. High of this bar, 38.75. I want to see something on a 1 minute chart out of curiosity. There's that 1 minute chart. Very tight bear channel. And you can see we sold off really quick. Whenever I find something interesting and I want to make a slide over it, I make a note, but that's always interesting. Shaved tops. Now, obviously, there may not be a gap here if you really look at different brokers, but the point is, it's very hard to sell these closes. If you sell with limit orders at the close, you may not have been filled. So it's aggressive selling. Big bear bar, but strong enough, we're going to go lower. So this might be a pullback, so more of a sell the close than a buy the close. 51, and you can see pulled back, trader sold it. Consecutive bear bars, probably going at least a little bit lower. Measure move down, reasonable. May get a measure move down of the open of this bar, close of this bar, or maybe just the breakout bar itself right here. Doji 52, and then low one 53. Buyers below, probably sellers above, and you can see what happened. Why was there sellers above 54? A big bull bar because it's two legs up. We rallied on 52, pulled back 53, found buyers at 53. Sell the close bears, scaling in, disappointed, buying back shorts, and then 54 is the second leg. But at 54 reverses down, it's double top. So that's why it was a sell the close bar. 55, big bear bar, probably going to go lower. It's tempting to want to buy the close of these bars, but the reality is that's strong enough selling that the first up is probably going to be limited. And you can see we're below this target. We've reached a measure move of that target. May get a measure move of this target, which we did. And the next target, the high of the move, here, and the close of this. And we might reach that. And obviously, we did a few bars later. 58, bull bar, probably sellers above. And then, 56, 57, low one, but strong selling pressure. Anybody buying low ones are going to be really quick to exit. And you can see, you bought the low one, and then you saw 58. If you didn't get out quickly, you got trapped. The low of this bar, 21.75. High of this bar, 21.75. A lot of bulls, when they saw 58 be a bad stop entry, a lot of those bulls gave up on the idea of buying the low one, and a lot of bears sold the close, and that's what led to the retest. 59, 60, consecutive bear bars, but parabolic in a wedge. 1, 2, 3, and lots of selling pressure in a short period of time. So I suspect the downside's probably limited. We also have the low of a few days ago on the 17th, which is 575, and the low of this bar is 675. So we came within 1 point of that low from a few days ago. And you can see, here it is right here. Sell climax, bulls making money below bars, below here, bulls buying here, still made money here. Chances are they'll make money buying below 55. Bad follow through 61, probably sellers above and sideways, but I suspect there's buyers not far below 61 or 62. And then we started getting dojis, doji here, doji here, doji here, probably buyers below 63, 64, a big bull bar. What about buying the close of 64? Some traders might buy the close of 64. The only problem I have with buying 64 is risk reward. You're long here. Let's say your stop is down here. 1 times your risk is all the way up here. And the reality is we're probably not going up here. So if you're buying the close of this bar, you're probably going to be disappointed, and you may end up exiting near the 57 low, the high of this bar. a lot of bulls that are long, when the market starts to go sideways, they will consider exiting. Bear bar on 65, probably buyers below. 66, outside up, probably going to get at least a small second leg after 64. A lot of times when you get a breakout, market does something like this: rally, pullback. Doesn't always go up to 100%, but sometimes maybe 50%. So we may go up to around 53.20. Consecutive bull bars, 67. Good for the bulls, but the market has memory, and traders know. They're aware of this right here, this bear bar. And because of that, you have some bears just saying, screw it. It's a strong bear trend. I'll sell here and scale in. And you see what's happening to the bodies: 66 outside up, breakout bar 67, weak follow through 68, 69 or 70 is probably going to start to go sideways and reverse. We're losing energy. And then 69, we gapped down and sold off rather quickly. There might be buyers on the low of 69 for a few reasons. One, buyers below, and bulls who bought up here scaling in, disappointed enough to look to get out break even. But we're probably going to get a second leg. So I suspect there's not going to be a lot of traders buying above 70 or 69. And you see what happened here? 70 rallied to the upside, and there were so many traders. It's hard to see it, but this tail went up, and there were so many traders selling up here. Bulls selling out of longs, bears selling at the moving average, that the market raced down really quick. Outside down, what about selling the close? Well, you're selling what could be a double bottom. You have a lot of disappointed bears, short down here, and the market reversed up. You have a lot of disappointed bears who sold, disappointed, scaling in higher. They may look to get out, break even. And that's what happened on the next bar. 71. What for the bulls? Bulls can buy the inside bar 71. Bears, I would certainly get out. 72, inside bar, probably going to go at least a little bit higher. Targets, let me get rid of some of this. So possible targets: 52 low, a breakout point low, measured move, bull breakout of this neckline. So we have a double bottom and the neckline. Bull measured move up takes you to 33.30. Then we had a big surprise bar, 73, big bull bar. But what do you notice? Big bar 71, small bar 72, big bar 73 with the tail. We may get a deep pullback here. At this point, I would get out below any bar. 74, bear bar, probably buyers below scaling and lower, but two legs up in an overall trading range market. Could be a second leg trap, so reasonable for bears to exit. 75, consecutive bear bars. What about selling the close? You will have traders selling the close, but they're going to be really quick to exit. And you can see, not great follow through, but a bear bar. And then what do you notice? Because 76 went up and then down, traders see it as a trend line break. And then we came really close to this low close down here and immediately reversed up. A lot of traders, what they'll do, if you're really aggressive, when the market starts to test down and starts to stall, you will have traders buying. And some traders look at a 1 minute chart, and as the market starts to turn up, they quickly buy, betting on a test of this high close. And that's why 78 reversed up. We had the sell off 75, 76. It was just a deep pullback that led to a retest. This is really common for second leg traps. Two legs up, deep pullback, retest of the high close. So that is a pretty common situation. And then 78, too late to really do anything here. And you can see we got all the way back almost to the open of the day. So as strong as this was, traders saw it as the leg in a trading range within a 4 or 5 bar type trading range here. I want to take a look at a few things. Euro versus the dollar. It looks like we're pulling back to the moving average. I've been talking. I gave an update on the euro versus the dollar in the blog post last night after the market closed. And I mentioned here that the bulls are not doing enough. I think that we'll get a second leg up, but we may have to touch the moving average first. And that looks like what we're doing. There's probably buyers below this bar, buyers below this bar. I suspect we'll stall near the moving average. So everybody wants to know, there's a few things traders want to see. One is we have a big bear bar. How eager are bulls and bears going to be to trade it? Will bears sell the close? In other words, will we get a decent follow-through bar like this? Or better yet, will we just get an equal size bar? So tomorrow, assuming Friday's closed, are we going to get a bar closing down here with equal size with the small tail above the bar, indicating that a lot of bears and bulls sold, bulls selling out of longs, bears selling to go short? Or are we going to have disappointment, something weak, like a bull bar or a doji, warning traders that we may test down to the moving average, but there's probably buyers below? That is what traders want to see. So it'll be interesting to see what we get as far as tomorrow goes. And here, this is the problem for the weekly chart traders. We have a possible parabolic wedge. It's really hard to see. Rally, pullback, rally, pullback, rally, bear bar. So it's possible this week closes on its low and next week sells off down here. Not likely. And then obviously monthly chart, really tight trading range. And the parabolic wedge is 1, 2, and then 3 by climax. So the bears want to trap the bulls and get all the way down here. That would also correspond to a little bit more than a 50% pullback. If we do get down here, I think probably buyers not far below. And then weekly chart for the E-mini. Look at the week. Does that look like great follow through buying? Or do you look at this and say, yeah, that's fairly disappointing? I mentioned that there might be sellers above this big bear bar here. And I think there are. They're disappointed here, but I do believe we're going to pull back over the next several weeks and get back here. Next several weeks could be a couple of months. So it could take 6, 7, 8 bars to get down here. But chances are, even if we go a little bit higher, there's probably sellers above and we'll probably convert into a trading range. So I doubt we're going to go straight up. I think that's fairly low probability, straight up to 5,600. I almost forgot. Always in. So stop entries. Always in traders. Not really good anywhere. If they buy above any bar, they probably get out below. I'd get out below any of these bear bars had I been long. And what about buying or selling? Tight trading range, I would not. Maybe buy 16, 17. We have a wedge bottom, possible expanding triangle, but a wedge bottom and a higher low. So maybe you buy here. Not great. If you did, I think you certainly get out below either 22, certainly 23. Always in bears, sell below 23. And then I'd get out on the reversal up or above 30. Bulls, they can buy 31, 32, or 33, but lots of disappointment here. What do you do with 40? Some traders get out, break even. Other traders, maybe they hold, but again, not ideal at all. And then bears, do they sell? I would not. You're selling the bottom of what could be a tight trading range right here. And this might be the buy zone. Better to look to sell a pullback like 46, 47, or 48. Always in bulls, I'd get out below 46, 47, 48. Bears, they can start selling. And obviously, if the bears sold anywhere, they had a really good sell-off. Do they have to get out anywhere in here? I don't think they have to. Some traders might get out above 54, but it's really just 2 legs up on a smaller time frame with a lot of selling pressure. So really not a good buy, forcing you to buy high in a tight trading range. And then pretty tough to stay long through this. I mean, the way I look at it is this. Had I sold anywhere here, from here to here, which no one's going to put a stop all the way up here if they're short, the market came almost all the way down there. And that's unsustainable. If you sold here, stop up here, you got 1 times your risk. So when this starts to happen, a lot of traders look at that as a gift, and it forces a lot of traders out of the market. It's unsustainable price action. It's kind of like when you get these big bars, it's unsustainable and you get a lot of reversals. This is more sustainable buying. This is more sustainable selling. But even that is still strong, and then it becomes more parabolic. This down here, hard to see it. This down here made it parabolic. And then always in traders, I'd get out a couple of points above any bar. These bars are about 6 points. So maybe you get out 4 points above a bar, maybe 5 points. And then bulls, where do they buy? They can buy above 66, but minor reversal. So you got to get out below bear bar here. So not really a good trade. And then bears, I don't know. Do you sell it? Possible parabolic wedge, 1. So 61, 64, and then 68. but really tough to be selling that. And then we just really went sideways overall. 73, bull breakout bar, big bull bar. But again, I think always in bears, probably get out. And then overall, I would do nothing here. Limit orders, buyers below 5, sellers above 5. Really just buyers and sellers back and forth. You can buy below bars, sell above bars, buy below bars, sell above bars, sell above here. Barbie buyers below 1, scaling in lower, buyers below 34, buyers below 36. Might be sellers above, but tough to do. And then really sellers above any of these bars, sellers on any pullback. And then 3 legs down, really probably buyers below, but I'm not willing to sell at this point. And then sellers up near the moving average, 2 or 3 legs up, 1, 2, 3. And that's probably it. Maybe if you're really aggressive, buying somewhere down here. Let me take a look at questions. Someone asked, what was your process for studying Al? Yeah, I spent years. I mean, I started studying Al in 2013. So it's been over 10 years at this point. And at first, it was reading the books. It was the blue book, the one book, and then the volume series, reading those. I was in Al's trading room for 2014, upwards of 2020 and beyond. So I don't know how many days I've seen of Al in the trading room, but I would imagine it's probably, it's a lot, hundreds of days of Al in the trading room over the course of years. And that was a huge, huge piece of beneficial piece to it. It made me believe in his information. And then on top of that, it was making mistakes, learning from it. The biggest thing I would say for traders, learn how to swing trade. Swing trading will teach you if you learn how to swing trade, you know how to scalp. Most traders, they try and scalp without understanding how to swing trade, and therefore they inevitably screw up scalping. You have to understand what makes this a credible sell. Lower, we have a head and shoulders top, left shoulder head, right shoulder. It's a lower high. We have a strong sell off. We may get a second leg down, 2 legs up. There's credible reasons for always in bears to exit here and aggressive bears to start selling. Therefore, it's a really bad limit order buy down here. And if you understand that this is extremely bearish, therefore the only thing you should do is sell, it makes limit order trading a lot easier. But that is what I would focus on. I'd also focus on learn how to swing trade, learn how to count legs, and really enjoy the process of learning. What happened to the pilot coaching series? Yeah, they'll begin after Orlando sometime, hopefully in June. So stay tuned to that. Was buying above 64 reasonable? Not really. I mean, you could buy it, but it's what I mentioned. You're buying high in what's likely going to be a trading range. Therefore, you're buying. If I'm buying this, I'm expecting a small second leg. Therefore, I'm more interested in selling over here than buying. So that's pretty dangerous. You got to be really quick to exit. And then was buying above 66 reasonable? Well, same thing. Strong enough rally for a second leg, but there's going to be sellers near the moving average. So unless we break strongly above the moving average, I'm more interested in selling up here. Was there a bias to the failed breakout on bar 63 that suggests 64 would be strong? Well, it's consecutive sell climaxes, parabolic wedge, 1, 2, 3, final flag. A lot of reasons for a potential reversal up. Plus, spike pullback channel. And we were getting pretty extreme. So the odds were we're going to pull back to the moving average fairly soon. What trades or mistakes did you make today? Yeah, one mistake I made, and I'll talk about some trades I took, is I sold here and I sold above here. We had consecutive bull bars, and I was hoping for a chance at a test of yesterday's high. I ended up reversing the long up here, and then I decided that was dumb. So somewhere during 48, I got out of the short and then just basically reversed my position back to short, and I had a target down here. My thought was we have a range. We're probably going to break out above it. If we're not going to brace to yesterday's high, or at least get above this high, my thought was when this started going down that this sell off was still in play. Therefore, there's trapped traders, and there was a reasonable chance for the market to get down here. I missed all of this because I had to step away, and then I sold somewhere up here, scalped out, and I bought here for a scalp. And then I believe I bought the close of two or a pullback, scalped out. And I know I made a mistake somewhere. I just can't remember where it was. I sold here, had a stop up here. I was planning to take half off at the open and the rest at what I mentioned over here at the Globex low. However, I tried to take the rest off. I got to find the Globex low. So I had a second target around 33 down here. So I was short, stop up here, took half off here, had a target down here. But my computer started having a really big lag for some reason. So I ended up closing the trade a little bit more better than break even, maybe for a point. And by the time I got my computer up and running again, I'd missed this move. And then I did a couple of things in Apple. Some of the things I like to do is so a lot of times I like to swing trade certain equities. So if I'm short, sometimes I'll end up selling the close of a bar. And I don't remember where I got short. I got short up here, took half off down here. And I think I held for almost a measured move and got out somewhere here. Obviously, this went a lot lower. Wider. I like Apple. I think Apple has good swings. But overall, just like the US markets, Apple's had a lot of pretty strong buying pressure. And we've been away from the moving average for a lot of bars, kind of a wedge top up here. 1, 2, 3. I thought the odds were we were going to test down to the moving average at a minimum. And that was pretty much all I did today. So where do we go tomorrow? I think tomorrow we're probably going to be mostly sideways. We're right back in the middle of this tight trading range. And look at the weekly chart. We're right at the open. And that means the market is fairly neutral. Open of this bar is 28 even. We're about a point below it. So I suspect we're going to spend a lot of time around the open of the week tomorrow. Okay. Thanks everybody for watching, and I will talk to everybody soon.